After a brutal fourth quarter and a rough start to 2019, many retail stocks have ignited over the past month, with the group suddenly back in style in the Wall Street fashion show. Even as the sector did take a breather today, I think there's more upside here as long as you're focused on best-of-breed operators. I'm talking about companies like Kohl's, the incredibly well-run department store chain. Kohl's has been able to thrive in a tough environment, largely because they're a lot more creative than the competition. The company has a brilliant partnership with Amazon, where you can return your Amazon orders to Kohl's in person, which is a great way to generate traffic. They've also got plans to shrink some of their stores and lease out the space to gyms like Planet Fitness or supermarkets in order to attract more people to their strip mall locations and also, of course, to fulfill a wellness imperative. And lately, Kohl's has been killing it on the merchandising front, selling tons of products made by Nike, Under Armour, Adidas. This is a part of a larger shift towards selling more big-name brands. For example, this fall, they'll start carrying Nine West. Oh, and the stock's still ridiculously cheap. It sells for 11 times earnings, 3.75% yield to boot. But don't take it from me. Earlier today, we had our first chance to sit down with Michelle Goss, the relatively new CEO of Kohl's, at J.P. Morgan's Retail Roundup Conference in New York. Take a look. Michelle, there are so many initiatives you're putting through, but in the end, you are a block and tackle person, driving traffic and operational excellence. Those are the two things you're looking for.
These are our two key priorities in the company. They've been in place, Jim, for a couple years, and I tell you, the organization is executing, and they work together. So operational excellence is all about how we drive our business and drive it profitably, and we use that to fuel more initiatives around driving traffic. And we have initiatives across the board, from product to digital, and of course into our store.
Now, what's important to me as someone who's a value shopper is I see brands that are lower than when I go online at your place, but I can try them on too. And there's a bit of excitement to getting the bargain for a Nike, for an Under Armour.
Yes, I mean, people always can appreciate value. They love a great deal, and that goes back to the core roots of the company. I think what sets Kohl's apart is that we have a great diversified portfolio of brands. So everything from those great iconic value brands, our private brands, to coveted and loved national brands like Levi's and Carter's, and our active brands like Nike and Adidas and Under Armour.
At the same time, Kohl's Cash, I've got them. I should get the app, I know. But Kohl's Cash to me means money in the bank.
You know, Kohl's Cash, people really think about that as our loyalty program because they come in, they buy, they get their Kohl's Cash, and then they get to come back in and buy more, treat themselves. And it's a phenomenal program. I mean, every year we issue several $1 billion of Kohl's Cash to our customers, and they happily spend it.
I mean, because it's just slightly more than 1,000 store base, so obviously everyone's making out.
Yeah, I mean, again, they come in, they get great value, and then they get a little something back for them.
I know another initiative that you're very proud of is wellness. We've had Planet Fitness on, a remarkable partnership that no one expected.
Yeah, no, active and wellness has become a very important part of our business. Jim, that business has doubled over the course of the last 4 years. It's now 20% of our business.
Wow.
Across the board. So that's active and athletic apparel, it's footwear, and it's even wellness items, things like Fitbit. And so as we look ahead, it's going to be even more important. We're expanding our space. We have 160 stores where we're growing that space over 25%. We're entering into new categories like golf and outerwear, and we're fostering unique partnerships. So Planet Fitness is a really great example. You know, that's part of what we call our rightsizing initiative. So where, as we look ahead, you know, we're committed to stores. We love our stores. We have 1,160 of them. It's the core of our business. But we think there's opportunity in some cases to make them a little smaller. And so in this case, like Planet Fitness, we're sort of shrinking the store and then bringing in a partner, and in this case, a great concept like Planet Fitness. So we're enabling our customers to work out, and certainly they can buy their gear from us afterwards.
We love the fact that you don't have to be chiseled to go to Planet Fitness, and it's got the right price point. I don't want to bury the lead. I know in the conference call, things was going like this, and then boom, right up. When you talked about the partnership with Amazon, it is sacred to me that someone, brick and mortar, has been able to partner with them, and it's on more than just devices.
That's right. I mean, I think our partnership and our pilot with Amazon is really interesting. we are selling their product. We just announced that we're going to be expanding into 200 stores and selling their Echo devices and other things. So I think that's really exciting. And then I think the returns initiative is one where we can really leverage each other's strengths. So I think one of the benefits of being in brick and mortar and having an online business is to accommodate easy returns. I think we can all relate to sometimes returning things isn't the most convenient. And as it relates to Kohl's, 80% of America lives within 10 miles of a Kohl's. So with Amazon, we're accepting their returns. It's really easy. You don't have to package it, so it's unpackaged, and it's free. And it's free, Jim.
Right.
So.
And I like that you have to go through the racetrack, so to speak, to get there. Do people buy when they go to Amazon? Do you have numbers which show how good a customer is who goes to return something?
As you'd expect, certainly some are, but we're still in a pilot stage. So when we make the decision, if we go forward, it really does need to be a win-win for both of us.
You have been at the forefront of personalization. What does it mean to both personalize and at the same time cut costs? I mean, these are amazing things because a lot of people feel like personalized means you've got to have thousands of people working on it. But you seem to be able to both cut costs and to make it so that you feel that you're an important shopper when you go to Kohl's.
Yeah, it's a great point. I mean, it goes back to our two key initiatives of driving traffic and operational excellence. So, we're looking at ways on the operational excellence to remove, as they say, non-value added costs, drive profitability, and reinvest. In both cases, technology is a huge enabler of this. So we are investing a lot of our capital into creating personalized experiences for our customer. And that can mean more personalized in the store or reaching them on a more personalized basis online.
Do you bring in a vendor to do that, or is it just something because you've got great data from Kohl's Cash and all from the register?
Well, our data is our own, and we've invested a lot of money to make sure that we can access that data and give to customers and serve up content that's relevant to them, products that they like to buy, but all doing it in a way that creates an even deeper relationship with them.
You talked about investing. There have been people in your shoes at other retailers who spent a fortune buying stock very high. Why did you decide to go for debt? Buy back that debt was so smart.
That's speaking to how healthy the capital structure of the company is. And we did. We bought back close to $1 billion of debt last year. We have a very strong balance sheet. And I think it does position us to invest and be successful over the long term.
One last question. You have the finger on the pulse of the consumer. And I know that February, the whole country was kind of screwy. So now we've got to look at March. I'm not trying to pin you down on numbers. That's not right. But is the consumer healthier than people think?
Well, certainly if you look at the trend over the last couple of years, the consumer's been really healthy. We've benefited from that, as have others, and we've also leaned into our own key initiatives to drive traffic. As we've shared, February got off to a slow start. The weather was tough with everybody.
Right.
But I'll tell you, as we look ahead to the year, we're optimistic. We've guided our business to be positive again this year, both on the top line and in earnings. And we always stay close to the customer. But I think importantly, Jim, if things were to shift, we stand for value, and that never goes out of style.
Doesn't go out of style. Absolutely. I want to thank you. It is just a great pleasure to be able to interview you. That's Michelle Goss. She's the CEO of Kohl's, KSS. Stock is owned by my charitable trust, and I think it goes much higher. Stay with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.